Good afternoon. My name is Ryan Herman. I'm the editor of CA Magazine, and we welcome you to this webinar on demystifying the new rules for MTD for ITSA. Now, as you're all doubtless aware, in December, the government announced the dates for the mandatory use of MTD-compatible software for ITSA would be put back to April 2024, from April 2024 to April 2026. So this was greeted with universal approval throughout the industry, with concerns around the capabilities of HMRC's computer systems, but also the new dates may well have provided some of you with some breathing space. And it also provides an opportunity for practices to now get ahead of the game. Indeed, CA Magazine's own accountancy and practice survey, produced in association with Xero, which was published back in November, revealed that nearly half of all respondents had yet to adopt any software solutions for MTD. So while moving the date to April 2026 was the headline news, it was one of a series of announcements which also included a significant increase in the gross income threshold for self-employed individuals and landlords. So today I have the pleasure of introducing Sam C from Xero, who will help make sense of these changes and explain what they mean for you and for your clients. Sam previously worked in managing software and accounting migration for over 5 years before moving to Xero in 2018. He now delivers compliance and tax-based education to accountants and bookkeepers, ensuring that they have the most up-to-date knowledge of the latest legislation and understand how Xero helps with compliance and practice efficiency. So over the next 35 minutes or so, Sam will provide an overview of what Xero is doing on MTD for ITSA and how it affects accountants and bookkeepers. But the session will also cover tips on segmenting clients, the new MTD thresholds, and how this changes which clients are affected, an overview of Xero's vision to transform tax and compliance and the MTD roadmap, a product demo of a Xero solution built to help accountants and bookkeepers to support clients affected by the new regulations, but also he will talk about how Xero can support you with their solution for non-MTD personal tax clients with new threshold updates. This will be followed by a Q&A session with Sam, and we fully encourage you to use this opportunity to put your questions or concerns to the expert. You can enter those questions at any time into the chat column. You don't have to wait until the end. So without further ado, over to you, Sam.
Excellent. Thanks so much for that introduction there, Ryan. And it really is actually a real privilege to actually be able to come along and speak to this kind of audience again. So it's always such a great joy when at Xero we get to come along to these kind of sessions and just show off what we're doing, and just to reflect a little bit more on that introduction that I was given. Like Ryan said, my name's Sam. I've been with Xero for quite a while now, and even before that, I've worked a lot in tax and other tech, especially when it comes down to some of those migrations and this whole new world that we're looking in when it comes down to what HMRC is doing with MTD and mandation has really upped the drive and people wanting to consume some of that content. So I have this great privilege working as an education specialist at Xero, is to be able to talk to accountants and bookkeepers so often about all these new tax legislations, about everything new that's going on, and like I said, do sessions like this. But that's just that little intro about me. And without further ado, what I'd like to do is I'd just like to share my screen, throw up some of our slides, and get going. So what I'm going to do is I am just going to hop off video for now, but I will come back on to video once we get to the point of looking at our questions. But so just to follow up and just recap, there is I'm going to be talking about the brand new rules and those new thresholds. So hopefully demystifying some of those new rules for MTD for ITSA. And I'd like to just cover off again what I'm going to be talking about. So Ryan gave a fantastic introduction there, but what I'll just recap on there is I'm going to start off talk about what MTD for ITSA is, because even if you weren't necessarily keeping up with the updates, I'm sure you already know what MTD for ITSA is, but it can never hurt to just do that recap again. I'm then going to talk about that new ITSA timeline. So we're going to go over that timeline and those thresholds a good few times today as we go through this session, just to really get to grips with them. I'm then going to talk about the future of digitalization, and how MTD for ITSA will affect you as accountants and bookkeepers, and actually how we can use this additional buffer time to get ready for those changes, because there are going to be a lot of changes that ITSA brings. I'll then go through our ITSA solution, and then I do have some time to also talk about that non-MTD self-assessment solution. So, of course, at this point, we know that MTD is making tax digital. It's part of the UK government's long-term strategy to become the most digitally advanced tax administration in the world. Each year, they issue that publication, the Measuring the Tax Gap, just showing us how much they believe they've missed out on. Difference between what should have been paid and what has been paid. I'm sure many of you have already read it. I personally can't recommend it, it's a bit dry. But if we then look forward at that revised MTD timeline here. Back in April, we saw the introduction of the first wave of MTD for VAT, which affected approximately 1.2 million businesses whose turnover was over that VAT threshold. From April 2022, we then saw all VAT registered businesses were then required to follow the MTD for VAT rules, even if their turnover was below the VAT threshold. HMRC have now updated the timeline for MTD for ITSA, MTD for income tax self-assessment. And this means that that first wave is now going to be from April 2026, delayed from April 2024. And the mandation for MTD for ITSA will be for those sole traders and landlords with that income of over £50,000. Followed by a second stage of MTD for ITSA in 2027 for sole traders and landlords with income over £30,000. Now, HMRC currently haven't provided an update for corporation tax. However, this wasn't due to be implemented until 2026 at the earliest anyway. And there are now currently no updates on partnerships or anyone that is under that £30,000 threshold. So that's already quite a big change from £10,000 to £50,000 and £30,000. So again, I'm sure so many of you will already know the key principles around MTD for ITSA, but we'll just recap on them anyway. And that's just because MTD for ITSA is going to fundamentally change the format and frequency of reporting to HMRC in a way that a lot of your sole traders and landlord clients have never experienced before. And that really means that there are going to be so many sole trader and landlord clients looking for advice on what it means to them. So to recap on those principles, that's the need to keep digital records if you currently aren't. There's an increase in reporting, and this is a really big one for both you and small businesses, meaning there's going to be extra work throughout the year rather than the traditional process of doing this just once. And then, of course, it's using that MTD compatible software to manage, track, and send those submissions over to HMRC. And so with this delay from 24 to 26, this gives us that nice window to actually be able to work through and get ahead of all of the changes. So just like the statistics that Ryan quoted right at the beginning there, quite a few accountants and bookkeepers hadn't actually gone through the process of moving people onto software to prepare for 2024, which meant that in that likelihood, we were going to see quite a big rush if the deadlines hadn't changed. So now that we have seen this delay, though, it means we can start thinking about how it's going to affect the practice in good time, and actually how your software provider can help facilitate some of these changes. So that increase in reporting means that your client's moving from that one yearly submission in January to the 4 quarterly updates periodically throughout the year, with the additional end of period statement, the EOPS, And then, of course, that final declaration. This is actually a huge increase in reporting for your clients, and also prompts the question of where some of this responsibility is going to sit. Are your clients going to do all the quarterly updates as part of their day-to-day bookkeeping and then hand over to you to complete that EOPS and the final declaration? Or are you going to think about taking everything on in-house? So HMRC has effectively implemented a phased approach to bringing in businesses to MTD for ITSA. That phased approach gives a longer, more generous time to bring businesses under the legislation and allows you as accountants and bookkeepers to really get ahead and on top of these changes. The phased approach comes with that set of thresholds dividing all of the affected businesses up. So that's 2026. We'll start off with all those sole traders and landlords with the income of over £50,000. And that will be those slightly bigger self-employed businesses and those landlords with many properties and those more developed portfolios. Then, by 2027, we'll see the mandation of the sole traders and landlords within the income bracket of £30,000 to £50,000. And like we mentioned, at the moment, there are no updates on those businesses that are under that £30,000 threshold. And actually, it's one of those moments where we think it's almost more important to get ahead of the mandation so you can understand which band your clients are in, so you'll know when they're going to be affected. And then with the introduction of those thresholds and that phased approach, like we said, it's changed both when and which clients are going to be affected. Let's break down those thresholds a little bit though. So we're looking at the first 2 years of MTD for ITSA in the 2026 and 2027. And that's going to be around 1.6 million taxpayers affected. 740,000 have that turnover of over £50,000 and will be mandated from 2026. 60,000 of them have a turnover between that £30,000 to £50,000 and then will be mandated from 2027. So when we look at these figures, we should actually also think about the first stage of MTD for VAT. So let's not forget that the first stage of MTD for VAT affected approximately 1.2 million businesses. And we all felt it, we all experienced, and we all know how big the impact of that was. And so despite the breakdown of these 2 years of ITSA, and despite the fewer businesses being impacted, it's really important not to take these figures lightly. So we're sure to see just as much of a change, if not more, for the 1.6 million taxpayers coming in 2026 and 2027 for ITSA. Now, at Xero, we actually believe it's important to look at MTD for ITSA not as just another piece of compliance, but actually instead as an opportunity and a step in the wider journey of digitalization. The future of accounting and bookkeeping is in its automation and keeping those digital records. ITSA is actually providing the chance to fully digitalize the practice, eliminate those paper records, and actually enjoy the benefits that working in the cloud brings. We've already seen the impact of MTD for VAT and what it had on businesses using both software and talking to their accountants more. ITSA is going to be no different. If anything, ITSA is going to prompt those clients to talk to their accountants even more than it did for VAT. And having your clients on compliance software means that you, as accountants and bookkeepers, will have real-time access to their data, which then allows you to provide that real-time advice, which then, of course, in turn helps improve those client relationships. And in the process of more and more businesses moving to digital record keeping, there's going to be this ever increasing demand for both practices and accountants and bookkeepers that are experts in those HMRC compliance softwares. And of course, the other huge one is that the growth that ITSA is going to bring is only going to help increase that client portfolio. So if we then consider what ITSA and the changes will actually mean to accountants and bookkeepers. Even though the revised ITSA timeline is going to change which clients are affected and delay when it's due, it's not going to change the requirements. It's not going to change the number of filings and the support needed by sole traders and landlords. That's still going to remain quite intensive. The revised timeline does, however, give you more time to prepare. And it's time that a lot of practices really needed. And this is probably also going to prompt you to change the plans you'd already put in place. And that actually includes getting in touch with those clients that were above that original 10,000 threshold, but are no longer affected, because they'll need to know that they're no longer going to be mandated by MTD for ITSA. However, they, of course, could choose to follow the rules if they wish. And actually, these clients could still benefit from moving on to accounting software as part of the journey through digitalization. And on top of that, it would actually be amiss to not acknowledge the huge burden that's on the shoulders of accountants and bookkeepers when it comes to getting ready for MTD for ITSA. And that's because you're going to be dealing with those conversations of trying to get these clients to understand the benefits that compliance software and cloud software could give. They've been so used to not paying for this additional expense. And they've heard, and then if they have heard that there's going to be another delay, it's going to be even harder to convince them when you start getting closer to that mandation period anyway. So, like I said, it would really be like amiss to not acknowledge that that is the burden that is on the shoulders of accountants and bookkeepers at the moment. But then the next hard part is then convincing those clients that using bookkeeping software is only going to actually help improve their business. It's going to give you greater visibility. It's going to give them that day-to-day updates. It's going to give them better understanding of their cash flow and what they can do to make those smarter business decisions. Getting ready for ITSA is only that stepping stone into that journey of digitalization. Now, following on from that, what can you begin to do to prepare for the change? And this is, of course, if you hadn't started already, or if you're beginning to revise some of those plans for getting ready for 2024. So the biggest one is, even now, segmenting your client base. With the phased approach, it's even more important to understand who, when, and how many clients are affected. Once you've identified those clients, you'll need to look into perhaps how they're currently set up. What's your relationship with them? How are they currently doing their bookkeeping or their self-assessments at the moment? Are they some of those classic bag and box clients that show up once a year with a big shoebox full of receipts and just ask you to do their return? What are some of the things that you could be doing now? So there's the possibility of getting some of these clients onto compliance software well in advance. And that doesn't just benefit those clients, that benefits you as well. Because if we think about some of those bag and box clients, you have no idea what kind of information you're actually going to get from your client when it comes to filing season. Moving them onto compliance software means that you're more likely to have that reliable data when you need it as well. And there's also like contacting your clients to start educating them throughout the change. Previously, you had to tell them what the thresholds were, how they were affected. Now there's the chance to update them on those thresholds. and begin to maybe ease that transition? How can you separate those that are going to be affected into those manageable chunks? So you've got your clients affected in 2026 and the ones in 2027. And this means that we're no longer going to be dealing with quite so big of an influx all at once in April 2024. And then on the other hand, what are some of the things that you can be thinking about perhaps internally within your practice? If you think about how MTD for VAT went, what lessons could be learned from that? How were you able to persuade clients to move on to software? How did you do those conversions? What were some of the quickest and most efficient and cleanest ways that you brought those clients onto software? And actually, thinking about MTD for VAT means that you effectively have already started to build an MTD playbook. You'll already start to understand what worked well for you, what didn't, how you started moving people on for compliance and ready to submit to HMRC. You're going to be able to effectively use a lot of that information again when it comes to transitioning for ITSA. Think about how your team's going to transition, how the practice is. How is the practice feeling about the change? Do you have both the processes and the capacity in the team to help with the additional workload that this change might bring about? And it's really important to consider that the changes ITSA is going to bring about are going to be more significant than they were for VAT. Those businesses that were registered for VAT were actually already in the habit of that regular bookkeeping and submitting the returns on a quarterly basis. These ITSA sole traders and landlords won't be. So just to really drill into some of that information about like the segmentation here. So segmenting your clients help you better understand the workload and plan ahead. You can identify which of those clients are going to be affected first. And actually, you may already have some of those clients using the compliance software to submit the VAT returns. They'll require less from you as accountants and bookkeepers as they're already in that habit. But like we said before, there are going to be plenty of clients who are still using spreadsheets or those shoebox clients, bringing in that big bag full of receipts once a year. And going back into breaking that down further, it's who do you want to move and when? So this segmentation has effectively been done for us, or at least the first tier of it, because we already need to understand and we need to know which clients are going to be affected come 2026 and then the ones that are going to be affected come 2027. But we can actually further break that down a little bit to those quick win clients, some that will be easier to move, those that are a bit more tech savvy, or even the ones that are going to really benefit from being on compliance software early. Identifying those clients allows you to be able to then spend more time with those that really need it. After all, if your clients succeed through MTD, so do you. Now, Xero have been working with HMRC really quite closely since they launched that ITSA pilot back in April 2022. And we've been testing our MTD solution in beta alongside them. We've already received so much feedback from our partners about joining our beta, and it's already begun to help shape the development of the product as well as HMRC's MTD for ITSA services. Now, as we stand at the moment, you're able to submit the periodic updates, file the amended returns to correct errors, and view those compliance obligations, deadlines, and the estimated tax values. Coming next is the ability to submit the quarterly product updates for UK property businesses, submit that end of period statement, and of course, the final declaration. And Xero's goal is to create a beautiful product and workflow that provides an end-to-end experience, all from within the Xero platform. And despite the delays at Xero, we are still going to have that product ready by April 2023. This remains unchanged for us. And so with all of that out of the way, let's take a look at our MTD solution. So we've made it nice and easy for accountants and bookkeepers or business users to set up and access MTD for ITSA. And so we know that that onboarding experience is going to be a critical part of the ITSA journey, just as it was for MTD for VAT. So we've created a simple and secure onboarding. So if I go to my accounting and then income tax self-assessment, I start my journey and I can press get started. The first step in this process will be to connect Xero to the HMRC account. And we can see here that we're going to start off on a 3-step journey to actually connect to HMRC and set up ITSA here. So that first step is actually going to redirect us to an HMRC pathway and an HMRC journey, and is really very similar to the setup process for MTD for VAT. A secure connection between Xero and HMRC means that users don't need to worry about logging into HMRC each time they want to view or submit ITSA data. If I press continue here, this is where I'll go and enter in the government gateway details, or as an accountant or bookkeeper, the agent services account. Then we can click sign in. And we're at the point where all we need to do is connect and grant the authority for Xero to interact with HMRC on your behalf. And so that's then given Xero the ability to connect with HMRC, and this will stay active for 18 months. MTD for ITSA then uses the national insurance number instead of the unique taxpayer reference as that unique identifier for the taxpayer. And then Xero will retrieve any businesses associated with the individual's national insurance number from HMRC. And then all you need to do is confirm which business that this Xero organization relates to. And that's it. The setup for ITSA is really quite simple. Moving on then, if I select go to dashboard, the ITSA dashboard allows users to view and manage their ITSA compliance obligations so they can easily see what needs to be done and when. At the top there, you'll see there's an estimate of the tax bill so that they can plan and budget for the year. You can see what's been submitted, what's due for submission, what's open, what's due, in this case, what's overdue. And of course, at the bottom there, you can also see that end of period statement as well. Now, we pull this data directly from HMRC, so they'll always have the most up-to-date information. And then to send that update to HMRC, it's nice and easy. We're going to click View on that update. The summary totals are calculated automatically from the Xero transactions created as part of the day-to-day bookkeeping process. It's not possible to edit the summary totals on this page. Any corrections must be made to the underlying Xero transactions, which for MTD for ITSA is that digital record. And so this means that our users are automatically complying with the MTD for ITSA requirements to maintain those digital links. That will automatically map all of the transactions for the period to the appropriate tax categories, but they can be viewed and changed if needed. But then to view how any of these totals are made up, you just have to click into the income or expense categories to see that breakdown. So if I go through and I click here onto travel costs, for example, we can see the summary total for that tax category, which accounts have been mapped to it, and then underneath a list of all the transactions that are associated to that tax category during the normal bookkeeping process. Going then back to the update, it's really easy to send that update to HMRC. We just press the Submit to HMRC button and confirm that submission. would get that notification on screen to say that it's been successful. And the status changes here as well. Going then back to the dashboard, we can see that that status has changed to submitted here. And as you can see, we can now move on to our next quarterly update, but then you'll also see here that this tax calculation has updated based on the information that HMRC have. Then a common question that we get asked is, what happens if we need to amend that update? So if you're then in the scenario where your client has come through and let you know that some of their background information is actually incorrect or needs changing, we can really quickly edit that in Xero and then refile the amended quarterly update. So in this example, my client here has let me know that there is a bill that needs editing. So I can navigate to my bill, edit the bill, change that background data, and update it. Now, if I go over to my MTD ITSA dashboard, there's actually a notification here to bring our attention to that particular update. And if I click into that update that says it needs attention, we get this big notification at the top here where Xero says we found changes to this update since it was last submitted to HMRC. But it's then just as easy to resubmit this amended update as it was to submit it in the first place. All you have to do is press submit again. It will show us successful. We get that updated, and then the tax will change again as well. And using the Xero's MTD for ITSA solution is actually as simple as that. Now, to quote our product manager for MTD for ITSA, she's said that just because the compliance and the legislation is complex, it doesn't mean the software has to be. And I think that really speaks volumes for Xero's vision on changing that tax landscape and making sure that we're able to build that beautiful product and workflow within Xero. But if I now just jump back to my slides there, because we can't talk about MTD for income tax self-assessments without also addressing those non-MTD self-assessments. So Xero actually has a great tool within Xero Tax called Personal Tax. And Personal Tax is a free benefit being part of our UK partner program. And additionally, Personal Tax does not require your clients to be on Xero or even using compliance software at all. It can be used for any sole trader or individual client. Personal Tax is that solution for the non-MTD clients that require a self-assessment. And with the changes to the ITSA thresholds, there are going to be so many more clients that you could use Personal Tax for. Personal Tax is one half of our solution for self-assessment to run alongside MTD for ITSA. By having both solutions for each client, you'll be able to choose whether it's a self-assessment or it's MTD for ITSA. And then just before going on to the time we have for questions here, I'd just like to leave you with a couple summaries. So MTD for ITSA is for those sole traders and landlords, and it's now been broken down into that phased approach. Businesses over £50,000 will be required to send those ITSA submissions from 2026. Then businesses between the £30,000 and the £50,000 threshold will be required to send those ITSA submissions in 2027. They'll be submitting those quarterly returns with that end of period statement and the final declaration, which is a whole new way of working for most of those affected clients. And of course, HMRC requires this to be done through compliance software. Now, I've mentioned Personal Tax through our partner program there. So if you're interested in becoming a Xero partner, then might want to reach out to our Zero account manager team, and you'll be able to join over 200,000 accountants and bookkeepers to save time and help your practice grow. And if you're already a Zero partner, feel free to reach out to one of your account managers for more information. And then the last one there is, this one I think is still just as important as it was before the delay, and it's don't wait. The scale of ITSA shouldn't be underestimated. Start now and get ahead of the curve. And with that, we can move on to some time for questions here, but I would just like to say thank you so much for taking the time to listen to the content, and I hope you're able to take something away from it. But if I now move on to try and answer some of these questions that we've got. So I can actually see there's only a couple of questions in the chat. So if you've got any more, feel in the Q&A box, if you've got any more, feel free to pop them in, but I'll go through and answer some of these now anyway. So there's a question there saying, do we think the thresholds will increase for inflation over the next 3 years, or is the 50K and 30K set out in legislation? That is an absolutely fantastic question there. And that's not necessarily something I think we can anticipate for, because we've got to see those 2 years. That's such a good question there. So I think the main one there is we can't necessarily anticipate for those thresholds changing under inflation. HMRC released their statement issuing that these changes to the thresholds were going to apply from these new deadlines. And without much more information from HMRC, I don't think we can make a sound guess for that really, but I don't know if we can anticipate that change. Another question has come through saying, what does the tax return only software look like? That's a really great question come through there from Catherine. And while I'm not able to show you what personal tax looks like now, if you perhaps raise a ticket with our fantastic Zero support team, or even tune into another one of our Zero webinars, we'll be able to take a much bit more in-depth look at that software. A couple questions have actually mentioned to clarify whether what the MTD for ITSA thresholds are. So is it income or profit? So it is gross. It is that gross income. It's not after any of the expenses or tax. There it is that gross initial figure. So these thresholds it is that turnover for 50K or 30K. Someone said, what's the best way to reach our account management team? Pretty much if you just go onto the Zero site, and you should be able to reach out through any of the, if you create a Zero login, you should then be able to reach out to our sales team who'll be able to put you in touch with our account managers and that sales team to find out more. There's another one said that do the 50K thresholds exclude amounts covered by PAYE? Is the threshold the total income, or is this solely their rental income? So that's a bit of a complicated question there, but I think the easiest way to just answer that question is to say that the submissions are separate. You'll have separate submissions for your for the sole trader income, and you'll have separate submissions for the rental income. Do the quarterly statements handle the situation if the accounts year is not coterminous with the quarterly period? So at the moment, the submissions and the beta from HMRC only accept users who have corresponding year ends to the submission periods. So at the moment, no, it has to be those that are in line with the submission periods, but it will handle it in the future. It actually looks like I've got to the end of the questions there, but I'm more than happy to just sit here for, say, 30 seconds longer to see if another question pops through. So while I wait to see if anyone else has another question, there is actually another point that is really worth calling out, and it's especially when we look at rental income. So whether you qualify for MTD for ITSA based on your rental income, it's based on your percentage share of that rental income if you own a joint or partner owned property. So for example, if you have a 50% share of a property with a partner, only your percent share of that income, that rental income, is what puts you down to qualify, not the total income. So for example, if you and one other person share a property and there is an annual income of £50,000 from the rent, neither of you would then qualify for MTD for ITSA, because at a 50% share of that £50,000, you're only getting a £25,000 rental income. If, however, it was a significantly larger property portfolio and your share after you've worked out was below that, was over that 50,000 threshold, that's when you'd also then be eligible. But from the back of that, it looks like there aren't any questions left. So again, oh no, one's just popped in right at the end. So are the thresholds combined? What if you have a 30k business income and a 30k rental income? Is that deemed below the threshold? They have separate submissions there. So you'd be eligible from 2027 there, I believe, for both, rather than the 50k at the start. But that looks like that is the last question. So again, thank you so much for having me on, and thank you so much for taking the time to come on to this session, and I'll hand back over to Ryan. Sorry, Ryan, you're just on mute still.
Classic error of Zoom. I just want to say thank you so much, Sam, for taking the time to talk today, and for everyone who's joined us all this afternoon as well, for taking time out of your busy days to hear what Sam had to say about MTD for ITSA. And hopefully you've got a lot of clarity out of this, and also hope potentially see this as an opportunity to take your practice forward and get ahead of the game on MTD, because now obviously with 2 years there is that opportunity to do that. So and if anyone wants to see, I think the webinar again, I think we hosted on the ICAS site, if I'm right on that, or on a Xero site. So but yeah, if anyone's got any further queries on that, they can always contact us at the magazine. But yes, thank you all so much. Thank you, Sam, and thank you everyone for joining us, and I hope you all have a good afternoon.